everyone, what has started as a correction, 10% correction on S&P500 and as well as ASX200 could now become a crash. And I'm going to explain why. If the worst happen, we might even see another 10% fall from now, which could totally at least 20% fall. And that will be based on my theory that I'm bringing this video is Donald Trump deliberately inducing a recession. We're going to break down this theory and try understand if there is a logic behind that. And if yes, what are the stocks or the sectors that could directly benefit? Let's have a look. Remember guys, this is not a financial advice. This is all about investing, trading, and how we can potentially take advantage of the current macroeconomic outlook, which by the way, doesn't look very good anymore since Trump has been putting those really high tariffs in many countries now, including Canada, Europe, China, and Mexico. Understanding that is critical. And if you are looking at those opportunities only come every 5 and 10 years, this could be one right ahead of us. Understanding the fundamentals of each company that you are looking to invest is not only critical, but also will give a peace of mind that if you are trading or holding or investing in a particular stock, you know exactly where your money is sitting. Okay, let's explore this theory about Donald Trump potentially deliberately pushing the US into a mild recession. Why would he even do that? The theory is that could trigger Fed to cut interest rates even further. And it's common knowledge that Trump likes low interest rate environment for business. But in this case, the ultimate goal here, based on this theory, is that Trump is actually looking to refinance 34 trillion US dollars of national debt at lower rates. And that is the main reason why Trump would be using these tariff policies, tricks, or whatever you call, to actually benefit the long-term prospect of United States economy. And if that works out, then obviously US could be in far healthier financial position within the coming years. But that could come as a great price. Now, let's break this down. The first thing I want to talk about is the US debt problem. The US government owns over 34 trillion US dollars. A huge portion is in the short to medium term debt that gets rollover frequently. High interest rates means high cost of servicing that particular debt. Hundreds of billions of dollars in annual interest. And that's exactly what Trump may be, if my theory is correct, will be looking at to reduce. If you look into Trump past comments, Trump's frequently pressured the Fed in his first term to cut rates, and that could happen again now, but not only in their speech or comments, but actually behind the scenes on this Trump's tariff policy. He also floated the idea of refinancing US debt or locking in low rate long-term debt, like issuing 50 or 100-year bonds. That could be the way. He knows that the debt is the major vulnerability for American balance sheet. And that's why I believe, according to this theory, that's exactly what he's doing. How a recession helps. So why Trump would take US into recession, and the recession, which is the cost of this whole thing, would help the country to grow. So let's break this down. If the economy dips, especially into a manufacturing slowdown, the Fed is forced to cut rates, and that will stimulate growth. Lower rates means cheaper debt refinancing, which means companies can go now and refinance their debt or borrow at a much lower cost to expand their businesses. So as Trump has been saying, first the pain and then the reward. If that happens, it also prompts up financial assets, which pretty much the stock market. As the stock market is now pricing potential recession, we could see after this a stock market even higher than the recent all-time high. Interesting, isn't it? Sometimes Trump often used as a metric of success. Now, every major economic change comes at a cost. The question is, could Trump trigger a slowdown on the economy? Yes, absolutely. New tariff isn't a very good policy historically. So especially on imports like cars and goods from China. It's not only is slow consumer demand, but also raise costs. People will pay more for the same goods. Not to mention the uncertainty. Investors don't like uncertainty. And there's a lot of aggressive policy talks. So sometimes Trump says something and then goes back and then goes again and he increases the tariff even higher. So this all causes a massive, huge levels of uncertainty. And that is no good, not only for the stock market, the economic development into US. So in other words, it's a very risky move, but a controlled dip could set the stage for 2026 and 2027 boom if Donald Trump policy works in the sense that he is looking at, which means with aggressive interest rate cut. So the ultimate goal here, if my theory is correct, is US go into a mild recession and Fed step in and start cutting rates. As Fed step in and start cutting rates, the economy will hit to a new level. And obviously that could mean the stock market at all times high, some stage in 2026 and 2027. But first, the pain. And the last topic on this analysis is the political payoff. As Trump has just recently been re-elected, I'm pretty sure his popularity now is far lower than it was when he was elected. And that is cause for the panic, the pain that a lot of investors, which by the way, most of them are driven, short-term driven, are now facing. But if the Fed start cutting rates, that means that Trump's theory could be working in his favor. And that will be the first signal that we have that the tariffs are working. Mild recession and Fed cutting interest rates. Once again, the collateral effect is stock market sell-off or a high-risk assets sell-off. That is inevitable. They're on the short term. So another 10% is plausible, and whether that's going to happen, we don't know yet. So that's Trump's trying to crash the economy so Fed can cut rates and US will prevail again. So that is the theory. Now, the good thing is, it's not only going to give people that missed out on the last rally in 2023, 2024, the opportunity to go back in the market or go in the market if it hasn't been exposed in the first place, and take advantage of buying high quality companies at technically discounted price. Obviously, like anything, the question is, how low will the market go? And it's very hard to predict exactly. But as soon as US is in technical recession and we see Fed cutting rates further, that will be the first signs that Trump's policy is actually working in this theory. And if that happens, that is exactly when we should see high growth tech stocks moving up once again and potentially even reaching new highs. So let me know what you think about this theory, and if you have any other idea regarding Trump's policy, or if you agree with the fact that we have strong suspicions that Trump is deliberately inducing US economy into recession. Thank you for watching.